Okay, what's going on, everybody? It's Kevon here, back again with another video. And today, what we're actually going to be talking about is the pretty much the one and only indicator that I personally really use when it comes to my trading. Like most of you probably have already known or heard, I am predominantly a price action trader, right? What this means is I am allowing price, these candlesticks, these sharp patterns, these different support and resistance zones to really give me my fundamental analysis on where I expect price to be going or where I expect it to not be going, right? Um, Within that, though, within price action, you also have these things called indicators, right? And you have a few different ones like moving averages, true range, things like that. None of those are really anything I'm going to go over because since they are not something I predominantly use in my trading, and it's not something I am predominantly fluent or I feel like I am at the level to where I should teach you guys. But there is one that I do like to use that I do feel I am fluently intelligent in, and that is going to be our RSI, right? So what is the RSI, you might be asking? The RSI is our relative strength index, right? Which really is just a simple indicator that lets us know, right? This indicator uses algorithm, connected to price to pretty much form its idea of when a price or an asset currency pair is overbought or oversold, right? So the two main levels that I like to use for this is really 75 and 25 or a 70-30, which is mostly going to be your typical whenever you hear someone RSI levels, it's typically going to be the 70 and the 30, right? So whenever you start to see price get above this 70 level, you're seeing as we see price get to the 70 or near this 70 level, we see price has now entered our overbought level, right? So that means there's way too many people theoretically who are holding this asset or who have bought into this asset, and now price is at a point where it needs to sell, right? It needs to retrace some of this movement because it's just too overbought, right? And the same goes with when price is in this 30 or 25 level, right? So we see here, once price gets to this level, we see prices hit a area where it has now become oversold, right? Too many people have sold this asset off, and now we're looking for price to rebound from this area, from this undersold area, right? From this undersold area, and we're looking for price to give us some momentum to the upside, right? So with that, two main things you want to mainly look for is you want to make sure that your RSI, which is a indicator, and indicators always lag behind price, right? So you can use indicators to better help you predict, but it's also very key to understand that all indicators lag behind price. So if you understand price, you essentially don't need the indicator, right? Because you already know what price is doing. That is your best indicator. Price action is your best indicator, right? But if we just take a look at a few examples here, right? We see price hit this undersold level, and we see price has brought back to the upside. Another point, price hit this undersold level and brought back to the upside just a little bit. Now we see some of these rallies, some of these valleys, right? You call the top peaks valleys, right? So we see some of these valleys near this undersold level can have huge up runs. Like here, we see from this undersold level, we see this rose about 500 pips, right? And then we have different valleys that we see 300, another valley here, 140, right? So there's no guarantee to how far price is going to move to the upside or to the downside. But what the RSI indicator does do is give us just a little bit more of an indication if needed on the possibility of where price is headed. So let's just take a look at Bitcoin, for example. We see, and we can literally clear off this just for a second here. We see price hit this undersold level here around 35,000, and we see price continue to bullish run up to about 44,479. And we see some of those similar effects here. Here again, we have another price point where price is undersold, right? And we see price continues until it hits about this area here on this strong trend. Well, it really kind of continues down for a bit right before moving back up, which shows you kind of the main reason why we don't necessarily just look at an indicator. And if you actually look, this scenario right here is actually something you would call divergence, right? So divergence is when, let's just say on an indicator like an RSI, you have the indicator price moving upwards, but the price that is indicating is moving downwards, right? So this is called divergence. And typically, I'm not a big trader of divergence, but I do know a lot of people who are very fluent in divergence, and it does help you a lot, right? So really my main thing here is not to only teach you how I trade, but to teach you the best way you can trade for yourself. So when it comes to divergence, even though it is not something I use a lot within my own trading, I do know it can be very beneficial if you do take the time to really study and backtest different scenarios of divergence within different underlyings, whether that be currency pairs, cryptocurrency, indices, commodities like gold and silver, whatever it is you are trading, I believe that can be beneficial. But if we see, this is an example of divergence here where we have our indicator indicating upwards or price moving upwards, and then our actually underlying price is moving downwards, causing we see the divergence. So we see the difference in where these are moving. Typically, when you see divergence happen, you will see a large break one side or another. We see with this divergence, we did see our price break majorly to the upside from this level, reaching all the way up to 6,800, right? Or 68,000, my bad. Talking about Bitcoin, I said 6,800. 68,000 within a price valuation, right? So very definitely something to keep in mind when looking at the RSI. You want to make sure that what you are looking at correlates to what price is doing. And honestly, when it comes to RSI, there's not much past that here besides, hey, you're seeing price at overbought levels. That should give you the indication that you may want to look for potential sales, or may gives you a better understanding that, hey, at this level, you may see price pause, react, or just completely start to reverse in trend, right? So we're seeing another example, price oversold, comes all the way down, right? Another example here where price was just oversold, at least on the RSI, comes down a little bit, gains momentum, continues to the upside. We have another oversold point here, but we also have another point of divergence where we see price is moving up, but divergence is moving down, right? So like, again, another key thing to look at here before moving back to the upside. So with that, that is going to conclude this video going over indicators, or more specifically the RSI, relative strength indicator, when it comes to how do we use this indicator to better assist us in our trading, or how can we use this indicator just to give us, a little helpful tidbit. I'm not, like I said in the beginning, I'm not really big on indicators. I rarely use the RSI, but there are times where I might throw the RSI up just to, if I'm thinking like, hey, I feel like this is a strong resistance level, what is the overbought level, or what is the current level where price is sitting, to where is it overbought, oversold, to help me just get a little bit clearer picture with everything, right? So with that, that's going to conclude this video. If you have any questions or concerns, you can always reach out. And like we always say, see you in the next one.